Welcome to The Explainer. Today, we're digging into the absolute frenzy of investment pouring into artificial intelligence. And really, the big question on everyone's mind is this: are we watching a genuine tech revolution unfold, or are we just standing on the edge of a massive, spectacular bubble? All right, let's get into it. So, we're going to start with this classic piece of wisdom from Warren Buffett because it just perfectly frames the entire question for today's explainer. With billions, maybe even trillions of dollars flooding into AI, you have to ask, what's really going on beneath the surface of all this hype? When that tide of easy money and excitement finally pulls back, what's going to be left? To really get a handle on the scale of what's happening right now, we have to rewind the clock just a little bit. We've got to go back to the one single event that basically fired the starting gun on this whole race. And that event, of course, was the launch of ChatGPT back in late 2022. Now, this wasn't just another shiny new app. No, it was seen as the arrival of a truly game-changing technology, and it immediately sparked an all-out arms race among the giants of the tech world. So, just how much money are we really talking about here? Let's take a look at the sheer amount of fuel that's being poured on this fire. And I gotta tell you, the numbers, they're absolutely staggering. Just look at this number, $562 billion. That's the projected capital spending, or CAPEX, by big tech firms for the year 2026 alone. To give you some perspective on that, that figure has more than doubled in just 2 years. It's insane. And wow, this chart really shows you the trend. You can see the absolutely breathtaking acceleration in spending. It's a classic hockey stick curve, and it's being driven almost entirely by just a handful of players. We're talking Microsoft, Amazon, Alphabet, Meta, and now Oracle too. They are all in. Which, of course, leads to the big question: where is all this cash coming from? Because if you want to know if this is sustainable, you've got to follow the money. And honestly, the answer might actually surprise you. Here's the crucial point. This isn't a debt-fueled frenzy. These companies are operating from a position of almost unimaginable financial strength. I mean, with nearly $500 billion in cash just sitting there and generating almost $400 billion a year in free cash flow, they're funding this entire arms race out of their own incredibly deep pockets. Okay, so all of this historic spending is flowing toward one single goal: building the infrastructure for AI. And that leads us directly to the single most important company in this entire story, the one selling all the picks and shovels in this digital gold rush. We are, of course, talking about NVIDIA. Its advanced GPU chips are pretty much the irreplaceable engine of this whole AI revolution. The demand is so far off the charts that the company reportedly has a $500 billion booking pipeline through 2026. The only problem? They simply cannot make them fast enough. And look, this isn't a simple problem they can just fix. There are real-world physical constraints at every single step. The advanced packaging facilities are totally maxed out. There's a shortage of the special high-bandwidth memory that these chips need. And even if you can get the chips, a lot of data centers literally don't have enough electricity to power them. All these bottlenecks mean the shortages are expected to last well into 2026. So what happens when you have a handful of trillion-dollar companies desperately trying to spend hundreds of billions of dollars, but they're all getting stuck at a single supplier? Well, you get some very strange and frankly pretty shocking effects on the entire stock market. 8%. That is the share of the entire S&P 500 index that NVIDIA stock now represents. This is the largest wake for a single stock since people started keeping records. The fortunes of the entire U.S. stock market are now directly tied to how well one single company does. But believe it or not, this story of concentration doesn't stop there. It actually gets even more wild when you start to dig into where NVIDIA's money is really coming from. First, just look at this number, 39%. What do you think this represents? I'll tell you, it's a figure that shocked even seasoned Wall Street analysts. That's right. In its last reported quarter, two unnamed customers, who are widely believed to be Microsoft and Amazon, accounted for nearly 40% of NVIDIA's total sales. Think about that. A huge chunk of this historic boom is flowing from just two boardrooms. And to put that in perspective, this level of dependency is almost unheard of for a company this big. Even Apple's largest supplier, Foxconn, usually only gets about 10 to 15% of its revenue from Apple. NVIDIA's concentration is in a completely different league. And yeah, that creates enormous risk. So, this intense concentration combined with this explosive growth and these historic valuations, it forces us to confront that big question and to start looking for echoes from history. Okay, let's just run through this because the warning signs are getting really hard to ignore. AI companies are driving almost all of the stock market's gains. Market concentration in that handful of tech giants, the Magnificent Seven, is at a record high. The total spending on AI has already blown past the peak of the 2000 telecom bubble as a share of global GDP. And get this, NVIDIA's valuation relative to the size of the entire US economy is 3 times larger than Cisco's was at the absolute peak of the dot-com mania. And as Mark Twain famously said, we have definitely heard this rhyme before. The language, the excitement, that feeling that this time it's different, it's a very, very familiar tune. And this just brilliantly illustrates the visual pattern of these market manias. The chart on the left, that's the meteoric rise of AI stocks today. The chart on the right shows a different historical mania. And it just reminds us that these parabolic moves often look incredibly similar right before a major correction. I mean, the shapes, they're eerily familiar, aren't they? And this fits a really clear historical pattern. History is pretty loud and clear on this point. Every truly transformational technology, from the railroads that connected continents, to the radio that connected households, to the internet that connected the world, every single one started with a period of euphoric mania, overinvestment, and a bubble, before it finally matured. Brilliance and bubbles, it seems, go hand in hand. So the crucial point, and the thought we're going to leave you with, is this. We know AI is revolutionary. That part is not really in doubt. But that doesn't mean it isn't also a bubble. The two are not mutually exclusive. In fact, history suggests they often show up together. The only real question is, where are we in that cycle right now?